Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We are going to take a look at what is in store as we kick off this Wednesday session. We continue to see a lot of chop in the S&P, and let's talk about how narrow this chop actually is and just how difficult it is to trade, expecting any kind of follow through in an environment like this, and frankly, probably the kind of things that are working relatively well. So first of all, you can see that this automated drawn Darvis has resistance at about 58.29, and we have support at, call it 57.22. So you can see with this kind of range, I mean, it's about 100-point range, just over. And that means that as soon as we start getting close to the resistance, the selling pressure comes in, we start getting down towards support, the buying support kicks in. So selling resistance, buying support, back and forth. The biggest challenge for me, and I think everybody needs to know what an ideal scenario for their trading style is and what a less than ideal scenario for their trading style is. And for me, anytime we're stuck in a range, I don't care if it's moving up, I don't care if it's moving down, I don't mind if it's in a wide range like what we saw at the beginning of September. Narrow ranges are really difficult and really probably favor traders who sell premium, because if the market's really not going anywhere and time's just marching away as it does, they'll get that time decay. However, there's a cost to pay, there's a risk, and the risk is eventually we will, it's not a matter of if, it's just when, we'll break out. And that's when the volatility kicks in and oftentimes the momentum will shoot up. So this is where we know what the advantages are for some folks who just like things in a range and they're going to write premium and market goes nowhere, and time decay helps that trade because they're looking for the option to expire worthless. And I would say, our short-term traders, let's say you're a day trader. Is this great for day trading? It really depends. Because just because the range is 100 points wide doesn't mean the candles are moving all that much. So take a look at the range from the 23rd. It was 39 points. The range from the 30th, that was 64 points. Yeah, we had a decent range the other day at 74. Yesterday, we had about an 81-point range. But just because the range from top to bottom is 100 doesn't mean that the candles are going to be moving that much. And that's where this is just one of those scenarios where we're not selling off, we're not rallying either, we're just going nowhere. And going nowhere really is an enemy to the vast majority of traders. Now, is this a big deal? Oh gosh, no, right? We're going to have periods of time. They usually don't last this long. In fact, this has probably been the longest, narrowest, range-bound environment we've seen all year, right? So if I look back on the most difficult type of environment to trade, it's not moving down. It's certainly not moving up. It's a narrow range. Learn to recognize these things, and you'll learn to sort of tap the brakes. You'll learn to be a little patient with the S&P, but not everything is stuck in a range, right? So that just reminds us the markets, metals, energies, indices, treasuries, currencies, right? It's a great big place. When we say the markets, right, what does that really mean? It actually doesn't mean anything, but it's a collection of all these different individual pieces. So where and which pieces have a probability of moving higher? So we've got long positions in a number of places in the sector secrets mastery. We've got long positions in utilities, which could be tricky with this storm because basically Florida Power and Light is the number one weighted sector via NextEra in the XLU. So as that storm approaches, we've seen a lot of volatility in NEE, which is why we traded XLU to sort of dilute that effect. But look, if the utilities have a lot of volatility, the stocks within them can as well. Another way to trade it would be look at utilities and look at maybe Southern Dominion, Duke, and try to lessen the effect of Hurricane Milton heading towards the west coast of Florida and the impact on NextEra, again, Florida Power and Light. So we've got long positions in XLU, long positions in gold. And, again, if I'm not getting trends in the S&P or the NASDAQ or the Dow or the Russell, I'll look elsewhere. We've got a long position in basic materials as well. But again, straight up, when the S&P is stuck in a range, when the Dow and the Nasdaq are stuck in a range, but most especially the S&P, because it reflects the two of them. S&P is a little bit of the Nas, it's a little bit of the Dow. When this is stuck in a range, it's just going to be a little. It's going to be painstaking. There won't be as many opportunities. The follow through won't be as good. And this is the opposite of account growth. You might say, Rog, wouldn't a downtrend be the opposite of account growth? Oh gosh, no. Right? Not at all. It's really a matter of, can we keep looking for what sector has some follow through? So there are some other sectors that have follow throughs apart from the indices. Let's dive into the sectors, and we'll see that XLK, SMH, XLE, OIH, and XOP have actually been some of the leading sectors. That's really a dramatic sector rotation from Q3 to Q4, where frankly, those five were usually languishing at the bottom of the normalized performance scale of strength to weakness. They were just kind of sitting at the bottom, being the weakest. So we're seeing that sector rotation from the bottom to the top, which is how it works. And we want to keep an eye on those as long as things like natural gas and crude oil continue higher. All right. Then that brings us to, I mentioned XLK. So XLK is going to be Apple, Microsoft, NVIDIA, or in the order of its weighting now, Microsoft, NVIDIA, Apple. And then, of course, you've got semiconductors, which is a story around basically NVIDIA and Taiwan Semi, and you can see that strength. So if you're ever wondering, why is NVIDIA, why are Taiwan Semi, why are some of these stocks moving higher? Because those sectors are, right? Those sectors are. So NVIDIA has woken up largely due to some sector rotation. But I will say this about NVIDIA. It's really mostly a momentum play. It really hasn't triggered an exhaustion buy since the first, which, by the way, October 1 would have been a fantastic neutral candle, neutral trend, but daily price movement range, volatility support zone entry. But is it something that typically would end up on my radar as much as something already moving higher with a trend? Probably not. But if NVIDIA is something you're watching, and I think a lot of people are, it's on a momentum run. You know, it's not something that I'm going to trade longer term on a daily. I might shorten the time frame and look for some short-term swings if they occur. But I think a lot of times traders see momentum runs, and unless you have a process of finding momentum breakouts early. Now listen to me, gang. All momentum breakouts are not the same. Things like this that tend to create a lot of complacency. Let me show you a pattern that hopefully is not only really easy to identify, it's something we use in the mastery, and hopefully it'll keep you from getting into momentum trades too late, or even better, get you in a little bit early. So if I have a setup like this and I miss it, right? The next day we've actually punched down to a lower low. And what's forming here, and you can see this tiny little arrow, this is a function of the Darvas 3.0. And the Darvas 3.0 not only draws automatic support and resistance, it's completely automated. It also identifies a pattern that I've been using frankly, since high school. And it's a very old pattern, and it's something called a minor low. And I don't know why this pattern doesn't have more popularity, but it's a really great pattern. It's probably one of the most powerful patterns for momentum that I've ever found. And here's what it is. It's a lower low surrounded by two higher lows. And this one had a gap in it, but nonetheless, once you get above, preferably the high, so in this area here, once you get above the high of that candle, let me draw this a little bit cleaner. All right, once you get above the high of that candle, that's the completion of the pattern, right? So this is the signal that the pattern is forming, and that's the breakout. That is the best way to take advantage of momentum breakouts. I have yet to find anything really better when we have movement and pullbacks and we're not sure if it's really a momentum play. I like that one a lot. The other momentum breakout would be something like this when we finally break through resistance. But this is really a precarious place because look, every time you play momentum, there is only one assumption. And that assumption is somebody behind me is willing to pay more. That's it. So it's always the thought of, I've got to be really in the front of the line. It reminds me of being in high school and middle school. Y'all remember camping out. I'm going to totally date myself. Camping out at the mall, and then you run through the mall to get to the record store. So back in the day, it was cellar door, right down here in Florida anyways. Cellar door, and you try to get in line so you get the good seats. And this is the way it was once upon a time. And that's kind of what it is, right? Whoever's in the front of the line is going to have a certain advantage when that breakout occurs, because everyone else typically, especially momentum traders, could be buying near or at the highs. They're waiting for a confirmation of higher highs. So what I'll say is, if you're expecting a breakout and you're already bullish because the momentum is up, right? Notice I'm just not randomly choosing the long side. They're mostly green candles. The momentum is bullish. So in a bullish momentum environment, look for that minor low. Okay? And these are very cool patterns. And you can see there's your signal right there. Now, that's not the signal to buy. That's the signal that the pattern is forming, right? A lot of people say, wow, this thing can see into the future. No, 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 no. It is just a signal that that's the higher high left behind, or that's the lower low. And then it gives me, and I like the signal. I like the signal, not the completion of the pattern, because I want to know when that lower low is giving me the opportunity. So that is what the Darvist does. And by the way, if you're waiting for the signal, it will reprint by design. So I do prefer a signal that's going to say, look, that was the higher high, but we punched up to a higher high the next day, or that was the lower low, we punched down, because it's not the lower low or the higher high. I'm not trying to pick a top or a bottom. I'm waiting for a pattern to form, right? So I like that signal. So I know, okay, if that held, if the next candle can take out, it's really a very cool, I can totally go down the rabbit hole on that. So to me, yeah, we could talk about NVIDIA now. There's nothing for me to do other than say, if on a 1 hour chart, we get a mean reversion, great, right? That's probably going to be your shallowest retracement to get long. But a lot of times what happens for traders is what came upstream, what preceded this move up to 134. That's actually far more important than what's happening now. Because if you can learn this, right? If you can learn this, then you've already got that covered, right? But most traders find a trade here and go, okay, what now? And my answer is usually not much, or shorten the time frame and wait for a mean reversion. And typically I'll look for that mean reversion to my top tier wave, which I don't have running at the moment, but I can turn it on. But yeah, I'll just look for a mean reversion to those lines. Let's actually do that real quick here. So that would be at this point in this move, that's where we are, right? But it's really important to say, hey, what preceded the move, right? What preceded that breakout, and how could I get in sooner so I'm not chasing it later, right? So here's your wave. And you can see as it's been moving higher, we've been having some sporadic here. We've had a couple visits to the mean reversion on the 1 hour time frame. So I know I deep dove that, but this is going to apply not just to NVIDIA, but anything going parabolic that doesn't have a trend. Anything going parabolic, suddenly moving, exploding higher, that isn't coming back and revisiting the daily price movement range. So that's really it. Okay. And that's the way I would look at it. And by the way, gang, for better or for worse, we're moving, I'd say, for better, because we've got this awful storm heading towards the West Coast. We've moved the first classroom session of the account growth plan to next Wednesday. The bad part is that it's because a storm is hitting. The good part is, if there is a good part, it gives everyone some time to not worry about the markets for a minute and, take care of what they got to take care of. And that's why we moved that classroom session out, because we just don't want anyone thinking they're missing something while a Cat 3 is likely going to be making landfall later on tonight. Now, that means everyone who's not on the West Coast of Florida, everyone has time to go watch the class again and prepare for the first classroom session, which is next Wednesday, the 16th. I think it's the 16th. All right. The neat thing is, if you haven't yet checked out the class, if you haven't yet gotten your HPMRs, DPMRs, access to the Sector Secrets Mastery, there will never be a better time frankly, including when we have sales here at Simpler, to join and get the indicators. It's always the best bundle. That's why I like everyone to know, because I figure whatever money you're saving, getting your education, you put that into your account. So if you haven't checked out what we have for the class, simplertrading.com/growth plan, depending on what tier you get, obviously everyone's going to get the class and those 4 classroom sessions after, which is great because you can watch a class at your own pace. And then for every week, for the next 4 weeks, we'll touch base and fine tune and fill in the blanks on wherever the struggles are as you're using what you learned in the class. The other cool thing is, again, depending on what tier you get, HPMRs, DPMRs, top tier indicators, the tools that I'm using to show you the mean reversions and the candle colors and the structure of the market. Again, check that out. And then probably one of the things that was very, very popular was I did a specific class on how I'm trading SPX, 0 days to options SPX. So check that out as well. simplertrading.com/growth-plan. Everything's been moved out a week, giving everyone a little bit more time as this hurricanes are coming in. Let's see, overall, one of the things we want to keep in mind is what triggers a stop. Oh, okay. Yeah. Overall, what we want to keep in mind with SMH and with NVIDIA is it's not quite a trend on the daily, but it's a trend on the hourly. Now, the only difference between the two, the way that we traded in the mastery, is that you need less time to expiration on a 1-hour time frame. And oftentimes you'll have opportunities at shallower pullbacks to get in. When the daily's gone exponential, is jumping up, you might get a chance to catch a shallower pullback, a shallower retracement on the 1 hour. So what triggers a stock to move into a trend? Ren, it's a series of things that we program into the multi-structure. So rather than me having to look at a bunch of secret squiggles and a bunch of lines crisscrossing and its price here or there, we just automate that. And so what's going to do it? I mean, primarily is price. Primarily. But another thing that we've factored into the multi-structure is participation. So it's not a matter of are we moving higher, but what kind of participation are we getting as we're moving higher or lower for that matter. All right. Okay. So that is what's going on with tech and with semiconductors. Obviously, NVIDIA is a big part of that. Both of these sectors are moving higher as we go into Q4 through October. This has been one of the stronger sectors. If you don't have a read on the sectors that are moving right now, I would tell you, go on back to the Simpler Trading YouTube channel, probably the channel many of you are at right now, and check out the free video that I posted, not even the premium where we get into specific setups and symbols, but just to get an idea of the broader view, right? Where is the attention and movement right now? Head on over to the Simpler Trading YouTube channel and watch last night's free video. And I can't remember what I called it, but probably something to do with uptrends and watch lists and being bullish, which is something I've been all year. We can then get really honed into what has the best chance of continuation. When you hear follow through, when you hear continuation, that's account growth, gang. Are you trading the symbols that have the best shot at growing an account? And if you find that's something that's lacking in the game plan right now, check this out. Again, between now and next Wednesday, you can watch all the replays, get all the resources, get your chart set up, watch the tech session, join me in the Sector Secrets Mastery, because that's one of the, again, depending on what tier you get, that's one of the things you'll get as well. So there'll never be a less expensive, more affordable time to do it. That's why I emphasize it so much. Take advantage of it. I'll see you all tomorrow. Same time, same station, gang. Be good to each other.